Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It is October 15th. This will be our last chart lesson for the week. We won't do one tomorrow, most likely. Probably Monday before we'll have another one. Um, Interesting day, a really nice rally today. It looked like it was going to be a real slow day, although I like range days like this where you get these kind of ranges because they're very predictable. Prices just go back and forth from one side to the other. And if you wait on the right setups, it's generally pretty good trading. And generally, uh, you're going to have a failed breakout one or more times on each side. And but the bias is for if prices do break out successfully, that they go um, in the same direction that prices traded into the range, and we traded up into this range. And notice when we had a successful breakout, we went higher. But notice what happens before we get that successful breakout. It looks like we're going to go lower. And that's what they do. They trap everybody in, and then they run it up, and then this thing takes off. And I love to try to catch these. This is actually supposed to be green and not red. These kind of trades right here, because if you caught this trade, any runners were safe, and you could have ridden this thing all the way up. And the very minimum I'd be looking for is there's your move up, your first move up. And so I come over here and and you see we turned down right at that, got a correction and got another bounce and went higher again yet still. So really good trading day, and you could make some pretty good money in here. You don't really get a lot of runners. There's a few runners that you catch in here, but for the most part, these, a lot of times I'll just scalp out on those kind of trades. It's when you get these failed breaks that you really try to, hang on to a runner, because that's where you'll catch them most times. But let's back out, talk about the trades, and we'll wrap it up for the week. First trade I saw that really set up decent was this one. And notice that we've got all that resistance right there. There's actually a trend line coming up through here. You can see that we had a break, moved to a new high, and then we trapped everybody. And then it looked like we were going to reverse and go lower, but we ended up just in this trading range. So this was the first trade I saw. We had this channel working up. We had the break, a new high. We had a little bit of a failed break higher, and then we had a second entry long, a first entry long, and then pull back, and then the second entry long. And even though there's enough ticks in there to scalp out, you still treat that like a failed second entry if it turns. And notice what it did. It went out the top and turned and went right out the bottom. Just go short right there, because there's a chance that this thing runs all the way down to the lows. And there's a little bit of a gap in there on the chart as well. So I'm surprised we didn't try to fill that, but the market wanted to go higher today. So this turns out to be a nice trade. You would have had a runner on that, and then we kind of just got hung up down here. You can't go short right into this. Somebody sent me their chart, and I think they went short on this second entry right here, but for some reason they had their trend line drawn a lot different. I want to say they had theirs drawn like this. And if you draw it, it does tend to be valid. Now, it couldn't have been drawn like that because they were taking it off that trend line right there. But that tends to be valid. I didn't even see that, to be honest with you, till now. And that is a valid channel right there, a larger channel. And we did get a break. We didn't quite get a new low, but the range was really taken over. So I didn't see that channel, but that would have, if I would have seen that, I would have been more apt to go short here. I doubt I would go short there, but I might have gone short over here too. I couldn't figure out why we kept turning down there. I just thought the range at the time, I just kind of moved my trend line down a little lower, and then moved it back as prices started moving higher again. But that's definitely a little different look at it right there. But I'm going to take those off. Actually, I wanted to show you what he was looking at. I don't know how he drew. He went short. Somehow he drew his across here. He must have drawn it off this high right here and just come across. I don't know how he got that trend line. I really don't. Um, I can't seem to get it at all. But he had a trend line, and he took this second entry short right here. But by that time, smart traders are thinking long, and you definitely don't want to go short right into that support right across there. You missed that. So definitely there's no short setup right there. There's a second entry short, but there's no short setup. You can't go short. Even if you had a better signal bar than that, I still would not go short right there, because now we've had your break and we've got a new low, plus you've got the support and you got a failed break lower. I'm thinking long now. I don't want to go long on that second entry, but when we get this failed second entry short, that's a second entry long counting off the low there, but when we get that failed second entry short, I'm going long right there. And that was a nice setup. But anyway, we had this nice trade. We moved down. We got the support across here. And then we get this little failed break lower. And you get somewhat, it's not a real strong reversal bar. So for that reason, I made it green. But generally, when you fail below that, you're gonna come back to the EMA at a minimum, and that would have given you enough room. And I probably would use a limit order to sneak in a little better entry here, but I think you actually would have had enough even if you just use a stop there. Then it pulls back. You don't want to go long right there into that EMA because you could get trapped and it turned back down. I think you're better off just to sit and wait. And it starts respecting that trend line, and then this confirms the trend line with a third touch, and you get a failed second entry short. Just go long right there. And a lot of times, one of these trades are going to really take off, and it just didn't happen. But as I showed you a minute ago, it looks like there is a trend line. People saw that trend line for sure, and this did confirm it. So looking back at that, notice we get an overshoot here. So looking back at that, and you're a good ways away from the EMA, I'd be willing to give that. It's real close to being red, but I'm going to give it a green one. It's a pretty bearish bar. And then you get a trend working down, and you just don't really get a setup here. It pulled back and turned down right here, but you're right into that support again. You need to be thinking long here. And if I'd have seen that trend line right there, I wouldn't have liked that long earlier. Actually, I still probably would if there's enough room to get out before you get back to it. But look what happens. It breaks lower right here, one tick. Hopefully you can see that. It breaks lower one tick and turns and goes right out the top. I think you would have still gotten out even with a stop, but I would probably use a limit order here and try to get in just a little better. And but I'm okay really using a stop since it went out on the same bar. I couldn't figure out why it probably didn't go a little higher than it did, but now it makes sense because there is a trend line, and I missed that. I was looking at the bigger picture and just missed it. I really thought this was your retest right here. Notice that you turned up and then tried to go lower there, but look, we come back, we get the retest, and then it goes higher. So sometimes you got to be careful how you read it, but if you look for the traps and you follow the rules, generally you're still, even if it doesn't go very far, you're going to get enough for your scalp, just like we did there. And then it comes down and it does make its new low and it reverses. This would be your signal bar, although your stop has to go down here. So what I would do is wait on prices to break above this greener bar and put it back here where it goes above this one, or really I'd try to get back in there another tick or so. And you would have gotten filled at least at the high of this bar here. And you easily would have gotten filled where this would have been your trigger when it broke above. And then when it pulls back and turns up again, I like going long because now you got a higher low here and you got the failed break lower. I really thought maybe we might get what we got over here, but it goes up and you get a break of this trend line, it comes back down, and where does it bounce? Right there off that support again. And when it bounces that many times, eventually it's going to take off, and this was the one where it took off. You got to pull back here, but you're right into that resistance again. It's a little bit of a breakout pullback long from here, It's not a very good setup bar. It did work, but I don't like it, so I don't think you want to go long or short there. And then we get a failed breakout. Um, this is what I liked about this one was it you got this. This is a 1 bar trading range. It's a neutral bar. It closes right in the middle. It's not bearish. It's not bullish. And prices broke above it. You don't want to go long above that, especially at the top of a trading range. But then it turns down and it goes out the other side and it closes and give you that really bearish bar. I like going short right there. And you really could have gone short on your stop when it went below that bar. All in the same bar. Quick, easy scalp. It comes back. But you don't get a very good setup here. I was afraid maybe, hey, maybe we're going to go long. We're going to go higher. But you can see that trend line working down across there, and we keep bouncing off of it. And then finally, notice you make a new low, pull back first entry. And even though you don't make a higher high, you got a higher low there. And so that's a form of a second entry, and that's a big bearish bar. Just go short right there. And we're back to finding resistance off that same area. And you should expect it to probably go to all the way to the other side. You can see it. We get a low overshoot here, and guess what that usually means? It means you're generally going to get a break of the trend line. If not on that pullback, very soon after. And guess what? You get a break, pull back, you go back. This is almost a repeat pattern of this right here. You don't get a little higher high, but that's still a form of a second entry short. Notice the new low, pull back first entry, then it corrects. Turns down. That's a nice move, and this one just keeps going. So you would have caught a runner there. And let me talk about this trade a little bit. Notice how we've been acting as support, and we make a brand new low of the day after it went below all of that. And look how far we are away from the EMA. Look how big that move is down. We're way overdue to come back, and we're at the very least we're probably going to test that resistance area, even if we're or it was support. Now we should test it, and it should act as resistance if we're going to go lower. But look what it does; it shoots right through. It actually doesn't find any resistance there at the EMA. It finds a little off that trend line, and it turns down, and it bounces right off that support line. Just go long right there. I'd just go along with a stop. But when it pulls back again and then turns up, you better load up there. I'm all for putting another load on right there because you wouldn't be out of this one yet. So I like adding on right there and look at it go. And so just those two trades right there by doubling up would really make you some money. So, and if you caught this one down here, you're really, and remember where I showed you, you're looking for your measured move right up in here. And that's where we got to, and I would have probably looked to exit maybe. And but guess what happens? You got a new low right here. First entry, short, pull back. It sets up for a second entry short. It never triggers on that one. It does break below that, but it doesn't break below the bearish bar, so it doesn't trap anybody. But then you get this one, and it breaks below and turns up. So I like going long right there. And it kind of slowly hesitates, but it moves on up. It's a form of a trap, and notice how we are working higher now. And this one is borderline being green, but if you saw the trap and you recognized what's going on, you're probably going to trap some people. It probably didn't trap as many as I thought it would because it took it a couple of minutes to work on higher. But I lost my train of thought. I was going to show you something or tell you something there, and I just lost my train of thought. Oh well, anyway, you do have to go long at the high of the day, but you've got that trap there, and there's also a double bottom. And look how many times we tested that area across there. 1, 2, 3, 4. And a market that can't go lower is going higher. And it's a little close to that high, so the more I think about it, definitely if you didn't see the trap and you didn't recognize that it's a form of a failed second entry short, then don't go long there. But if you saw all that, I'm okay with going long there. And it's real borderline being green. I probably could make that one green. It is so close. But I still like it for blue. And then guess what? You've got a two-legged pullback, second entry long, a nice reversal bar right off the trend line, right off the EMA, and this is a spiking channel. That's what I was going to tell you a minute ago. This spiked up and went into a channel. This is way too steep. You got to break here, move to a new high, and then we corrected a little bit, and then went into this channel here. But that's a nice two-legged pullback. But notice what happens here. You make a new low because this low is lower than that one. So the count is 0. Pull back, first entry, pull back, and you get two measured legs, and you get a second entry short there, and it bounces right off the trend line, right off the EMA. It's not a great signal bar, but it's a trap, and if you recognize that, go long right there. And again, you get another runner here, and you can ride this thing on up. And another thing I would be looking for is my measured moves in here. On the shorter term version, there's a move up here. So you'd want to go from here to here. And that's why I didn't like going long right there. It's a breakout pullback, and there is a little failed break out of that little range, but you might go to the very top and turn back down and come back over to the EMA. So, but it just keeps going on. So I would measure. That's really two legs right there. I would measure that one and then come over here, and you see you made a perfect measured move and backed up, went a little higher and then backed up. This gets you into the 2 o'clock hour. And again, it bounces right off the trend line. And this was a good rally. There was some news today. Can't remember what there was this afternoon. There was some kind of news. I don't know if this was news related, but there were some news items that came out late morning this afternoon. I don't remember what they were, but really good trading day. Wish I'd have hung around for the afternoon trading, but I was gone when this real rally started here, so I missed it. But needless to say, that's one thing I should talk about. If you miss a trade and you see it take off, or if you get up and leave and you come back and you see there was a nice rally and you missed it, you can't let that get to you. That's part of trading, because if you let it get to you, it'll pressure you into doing something dumb, and then you'll have a losing trade or you'll have a losing day. So don't worry about stuff like that. A lot of times I'll come back. When I left, I'll hit my target and I'll leave, and I'll come back to do the chart lesson and come back to see how the day ended. And I'll think, man, I wish I'd have stayed. And today's one of those days, but I don't dwell on it. I don't let it get to me. I got a lot of other stuff done today, and I was done early, and that's what I prefer. It's nice to come in and work an hour or two and leave, and make your money for the day. And that should be your goal. Because after doing this for 10 or 12 years, you get bored sitting here. I mean, I get tired of sitting here looking at this screen all day long. I used to be fanatic about it, but I don't need the screen time anymore. I've got the experience there. So I still come in, I study my chart, I do the chart lesson, and that's one of the things that, I've said it before. That's one of the reasons I like to do this chart lesson, because it forces me to go back and study the chart if I wasn't trading that afternoon, or even after the fact, because sometimes you see things after the fact that you don't see in real time, just like this trend line right here. I didn't see that in real time. I didn't even see it after the fact until the second time I looked at it. So I cannot encourage you or push you hard enough to understand how important it is to go back and do the chart study, your chart study every single day. If you want to learn to do this, if you want to get better at it, that's what you got to do. Go back. First thing you need to do is study all your trades you took. If they worked, figure out why they worked. If they failed, especially if they failed, figure out what you missed, why it failed. There's always a reason. Early on in my early days, I thought that occasionally I'd see good trades and they just fail. But the more I've studied the charts and the better I've gotten, the price action is never wrong. And good trades do not simply fail. We were missing things. And now I know if a trade fails, I study it hard enough to figure out what I missed. And there's always something that you miss if a trade fails. Very rarely If you're reading it right, well, never basically, if you're reading it right, does a good setup fail. There's some that are real close, but they're very, very rare, and even then you can always find something. So some little rule you broke or something that you missed in the price action, like this trend line coming down through there. Um, so understand that. It's important that you come back every day. First, study your trades, figure out what you did right, figure out what you did wrong. Make sure you understand the price action in every one of those trades you took and learn from them. Then start at the very beginning of the day and work through the price action just like I have right here, and put the trades on there that you see and study it. Spend another, once you get it all on there, spend another 20 or 30 minutes looking at it. I did that every day, 7 days a week, early on, the first couple of years. And that's why eventually I learned it. And the more I studied my chart, the more little nuances I picked up and little tricks I picked up. And that's how you learn. You can shorten it by me showing you the tricks and you learning to find them. So that's the whole idea behind this chart lesson, is me showing it to you. People will write to me or post, why don't you show your losing trades? This is not about my trades. This has nothing to do with my trades. So make sure you understand it. A lot of times if there's a trade I took that's interesting, I'll talk about it. But this is not about my trading. This is to show you, people that want to learn price action, where the legitimate setups are. They're always the key entry areas, key entry points. You hear me say that over and over again. Key entry points, key entry points. What are key entry points? They are corrections back to the trend line. Look what happened every time prices came. Look where prices took off every time it gave you your big moves, when it came back to the trend lines. This one working down. And then the support and resistance lines. Look what happened every time prices came down here, it bounced. Look what happened every time they got up here, they turned down. So that's where your best entries are, on your key entry points. Look at that trend line. Look where it turned down. Look where the big moves came from. It's really pretty simple. It's not easy to learn, but once you get it, it's really pretty simple if you're reading the price action right. You just have to be patient and wait on prices to show you what they're going to do. And there's times like right in here, you just got to sit and do nothing, because we're just going sideways. And, if you're getting long or short, either way, you're getting chopped up there. So just sit, be patient. I'm going to tell you, it's real tempting to go long right there, but you already had your first entry, and then you got a doji, and then it broke lower, and you end this. This is not really a doji here, even though it kind of looks like one, but by that time you got 4 or 5 bars stacked up there. Everything's still respecting the trend line. Everything's still below the EMA. The only reason you can't go short is because it's right into support, and you can't go long because it's right into a key entry point to the other direction, not up. So hope that's clear. But anyway, I'm going to wrap it up. Again, no chart lesson tomorrow. We'll be back again to do it Monday. Hope you have a good trading day tomorrow. Hope you have a great weekend. But I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.